Hello, everyone. This is Dr. Duru from AHA Analytics with the market breadth. Let's dive right into this market timestamp. It is after market close on July 18th. Here are the big headlines for today and the week. This was crypto week, ended with a big signing of a stablecoin bill. I expect the recent momentum in crypto to continue, even if it is going to be choppy now that the news is in. We have lots of analyst calls, AI mania worse than 1999's tech bubble. I think there can be a case for that, but this bubble could last quite a while. So it'll be an argument as to whether the bubble is now or whether the bubble is to come. But we will go through a bubble. It just has to, just given the amount of hype there is in AI. I'm still a big fan of AI, and I, of course, have my select AI stocks that I love. Here's an example of just this random speculation that pops up in the market in times like these because folks are fishing for beaten up stocks. Open Door is one of those. I thought this is basically a housing market related stock. I thought it was given up for dead and it just suddenly zipped up today. I haven't actually checked the news to understand why it's jumped up. And what's the other one I wanted to check out here? Yes. All these other crypto, there's another crypto IPO that's coming. And so we should expect lots more of these. So I expect a frenzy. If anything, the crypto bubble, we're going to have another crypto bubble before the AI bubble ever runs its course, I think. So stay tuned on that one. All right, let's dive into the market, starting with market breadth. What happened this week was that the market actually had a close call with a market breadth breakdown, and that's what caught my eye. I posted about this on a video on what was this? This was Tuesday. And this is the breakdown that I was referring to. My favorite technical indicator, the percentage of stocks trading above the 50-day moving averages, what I like to call AT50 for above the 50, had this huge plunge out of overbought territory. And as a reminder, overbought for AT50 is 70%. And you can see for what's been now over 2 months, the AT50 has basically pivoted around the overbought threshold, but has spent most of its time below. And as this continues, I'm actually getting to get a little bit more worried as time continues. I want AT50 to spend more time in the overbought threshold. And why? Well, that's because over this threshold is a proof or confirmation of how strong the buying is. If it continues to stay below here, I'm afraid that eventually the buyer weakness will be revealed and we'll get a whoosh downward. So that's what keeps me cautious. I'm still bullish, of course. This is still a well-supported market, but this is just something to keep an eye on. And so again, we had a close call with a market breadth breakdown, but the market rebounded right back. And what happened was on the following day, I thought we got confirmation of this because we had, what was the news? We had, oh, right, there was crypto news. It seemed like that the bills were going to be stalled. And we also had the Fed. Sorry, it seemed like there were rumors. Gosh, sorry about that. There were lots of rampant rumors that Trump was about to fire Powell, and he quickly refuted those rumors. And so we bounced right back. So you can see what happened there. Actually, let me zoom in. So you can see at the lows here, I thought we got a confirmation of this breakdown. Trump refuted those rumors and we bounced right back. But notice we did not recover the overbought condition. And today, Friday, AT50 fell back again and closed the week at 65.3%. So the proof is still out there to confirm that buying strength is in the market. Let's take a look at the other one, which is the percentage of stocks trading above their 200-day moving averages. You can see now AT200 has fallen away from this level, which marks the last time the S&P 500 was at its all-time high back earlier in the year. So I'm just a little bit cautious about this. I'm not overly worried, but I do want to see AT200 recover back to this line and even better to get above it so that we get sort of a bullish confirmation of these all-time highs. So right now we're a little weak, but not weak enough to have me worried. All right, let's go into the indices and then some individual stocks. And I'm going to fly through this one pretty quickly, I promise. So this is the S&P 500. You can see this is what had me doubly concerned is that S&P 500 made a bearish engulfing pattern. I put top in a question mark, and of course, it turned out not to be a top. But the next day, you can see how the lows almost touched the 20-day moving average support, which is this dotted line. And then, boom, we were off to the races again once Trump refuted those firing rumors. We even got a new all-time high on Thursday. So, given this as a bull market, I fully expect the S&P 500 to shoot higher. But again, I'm just cautious. But I'm only cautious to the extent that at some point there's going to be a cooling of this buying because the overbought conditions aren't holding. And the market's well supported at the 20-day moving average, at the 50-day moving average, which is the red line. It's even well supported below the 50-day moving average with the first post-election close line, the 200-day moving average, which is this blue line, and even the pre-election close. All of these lines are just waiting to hold and buffer any kind of pullback in the market. So it's just hard to get bearish on this market for more than a hot minute, like I like on Tuesday to Wednesday. All right, same thing with the NASDAQ. Very sorry about that. The NASDAQ actually, you could see it managed to close up every single day of this week. And part of that was because of NVIDIA had a great week this week. And I'll show that chart really quickly. Let me move this all-time high over here. So the tech stocks look even better than the S&P 500 because there is just this steady, 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 steady march higher. IWM, the iShares Russell 2000 ETF, had a much harder week than the other indices. You can see how it churned a lot. It opened up Monday on the brief pullback earlier in the week. It did touch the 20-day moving average, but it happened. So everything happened so quickly. I didn't think to buy any call options. So I'm exiting this week without any IWM call options. But as a reminder, I have a large core position in IWM shares. So I'm always a fan of this ETF going up. But right now, it's still lagging it's lagging again, the major indices, even as it's following nicely this uptrend defined by the 20-day moving average. All right, let's take a quick look at at some individual stocks that caught my attention. Um, Zoom Communications, ticker symbol ZM. Unfortunately, I have to, this is a requiem. I really thought that Zoom would be one of those stocks that would regain favor. It just hasn't. It broke down earlier this month below the 50-day moving average and its 200-day moving average. In fact, it broke down from converged support. That was very bad. It held at 20-day moving average resistance. So just overall, Zoom just looks poor. I'm not going to short it, of course, even though it is in a bearish position. I'm just continuing to watch it to see if and when it ever regains favor with a new breakout. So poor Zoom isn't quite making it. Okta is one I've come back to. It's just super choppy. I mean, it's enjoyed huge up days for post earnings and big down days. And the big down day was in May when Okta dropped, what was that? It dropped 16% post earnings. And I had previously sold shares before earnings. Thank goodness. I was a little, I felt like I needed to lock in those profits. And then I sold a put after earnings, thinking that Okta, is a strong stock, a cybersecurity stock. Thought it would hold. It did not. I got put the shares. I sold calls against those shares. I think I'm on my third round now. And I do like the way it's sort of holding 200-day moving average support. You can see how important that support was way back here in April and actually, so to speak, in February as well. So I'm hoping that holds. I sold another call option, and I'm just going to keep selling call options as Okta rallies. But I am hoping that I will end up holding the shares when it eventually recovers, as I think it shall. All right, let's keep it moving. Fastenal, ticker symbol FAST, had a great earnings, it jumped 4.2% to new all-time highs, and it's just kept marching higher. I wanted to buy on a pullback. Doesn't look like that pullback is coming anytime soon. Fastenal is basically an industrial stock. It sells fasteners, as the name would suggest, and other, I think, kind of connector bolts and stuff like that. All right, FCX, copper, Freeport McMoran. It's mainly a copper company. It also mines some other minerals. It had this big up day. This was actually last week. I sold my shares into this into this run up because it was well above its upper Bollinger Band. And once again, I'm proven it just proves prudent in terms of risk management that when price action gets overheated, as defined by as getting way above the upper Bollinger Band. And again, the upper Bollinger Band is this black line that defines expected price range around the 20-day moving average. It just tends to pull back. And that's exactly what happened. Even though copper, I believe, is the copper, the actual material, the actual mineral, sorry, is at all-time highs. So pull back nicely to 20-day moving average. I love this support, but earnings are coming up, I think, next week. So I'm a little too scared to buy back in, but I am itching to get back in when I can. Okay, I also posted about financials, and financials started reporting earnings last Friday all the way to this Friday. And I really thought that the former all-time high would hold a support. It did not. It broke down for 2 days while banks and other financials reported their earnings. The good news is it's popped back up above that line. I did accumulate calls into this pullback because XLF was still above the 50-day moving average. And again, this is the Spider Select Sector Fund Financial, ticker symbol XLF. It closed the week at 52.54. So it's looking good again, and I'm expecting, as long as the market is bullish, for this to resume some sort of rally. And let me just show really quickly. This is Wells Fargo and Company, ticker symbol WFC. This is part of the weakness in XLF. You could see it fell back 5.5% on earnings on Tuesday. All right, let's keep it moving. CoreWeave got a big downgrade today. I think that the analyst gave a $35 price target or something, which is taking it all the way back to its open post IPO. I'd be amazed if CoreWeave gets all the way back down, but you can see it is weakening. I mean, the stock was just way overvalued. It's been overvalued for a long time, but the market hasn't cared. But now CoreWeave has prudently and smartly started to take advantage of its very high share price by doing some deals. And I'm assuming they're going to hope that this thing stays up long enough for them to issue more shares when the for shares to be sold when the lockup expires. So now CoreWeave is broken down below its 50-day moving average. It's on this steady downtrend. You can see from the all-time high, it's steadily marching downwards. This is not a spot to buy or speculate on CoreWeave. I also am not interested in shorting CoreWeave because, number one, it's an AI play, and I'm a big bull on AI plays. But also, two, at any moment in time, CoreWeave could just out of the blue, for no reason at all, just jump 10, 15, 20% just because the speculators just on a particular day just decide to all swarm on the stock all at once. But anyway, like I said, this is the 50-day moving average breakdown. It closed at 123.02 for the week, and it is no longer in a buying position. The good news is if it breaks out above that again, I can become a much more confident buyer, even at these overvalued, elevated levels. All right, let's go to Duolingo, ticker symbol DUOL. I've got my eye on this one because it looked bearish for a while. After it broke down below its 50-day moving average, it just kept marching. You can see actually it's been trending down steadily since June. Right now, the 200-day moving average seems to be trying to hold in as support. If I can get a second close higher above today's close, which was $370.49, I would take a flyer at a trade on Duolingo just because the 200-day moving average held so well earlier in the year. So that I have every reason to believe it should hold again, unless sellers know something that's not quite out into the public just yet. And this is another reason why I'm surprised by this downtrend is because on earnings, let's see, this was back on May 20th, Duolingo soared 21.6% and even had some more momentum. So why it is the market has suddenly decided the news that was so good back here in May is now completely null and void, I have no idea, but it's possible this selling is overdone. So this is where technicals come in very handy, and that's what I will be using to follow along. Whirlpool, all of a sudden, this is another example of a stock that just rallied out of nowhere and then it looked bullish for a hot few days as it broke out above its 200-day moving average and then broke right back down. So once I noticed this breakdown, this was back on Wednesday, I went ahead and bought a put option. And sellers did indeed follow through today with a 3.6% loss. I suspect this bearish position is not going to last that long because the 50-day moving average could and should hold a support, but we will see. I got an August expiration, so I have time to let this play out for a little bit. And Whirlpool is ticker symbol WHR, and it sells appliances like dishwashers and stuff like that, and refrigerators. All right, here is one, Sarepta Therapeutics. Man, did I get caught on this one. They had a positive restructuring on Thursday, and the stock soared 19.5%. Sounded like good news, and I bought in. Actually, sorry, yeah, I bought in that day, and just a few shares, and I kept it a small position just in case, and I was going to stop out if it got to new lows. And part of what increased my confidence is, silly me, I was listening to Fast Money on CNBC, and they had a very positive review on the restructuring that's happening with Sarepta. This is ticker symbol SRPT. Unfortunately, right after that restructuring, boom, the next day the stock collapses. And actually, the buyers tried to rally the stock for a little bit, but then more bad news rolled out. I don't have time to go into all of the bad news, but basically, another patient died in a drug trial, and then the FDA is going to is reportedly ready to tell the company to stop selling one of its drugs. So it's just one piece of bad news after another. You can see that my buying into Sarepta was actually very speculative because this stock has been hammered over and over and over again for over a year. And if I pull back, let's actually just go and do this really quickly. If I pull back longer term, Sarepta was making a lot of headlines way back in the mid 2010s, and then it just soared, and it was the rage right here from 2000. What is it, end of 2016 to 2018, and then it just stopped cold. And for years, it would go through these hype cycles and then down cycles and hype cycles, and you can see it basically went nowhere until finally the stock gave up the ghost, broke down here. Let's see, let's just call 62.25 a support. You can see this is I put into the weekly view. You can see once it broke down below that, buyers tried to recover support, failed right at that resistance line, and then bam, Sarepta was just done. And this all happened just back in March through May. So the biggest weight of the bad news has really come recently for this stock after years of hanging in there. So I really was taking a huge flyer to jump into this one, and it basically blew up in my face because I didn't even have a chance to stop out at the lows here, which was my plan, my risk management plan. So now I think it's overdone. It sold off as much as 40% on the day. I sold a put, a 12 at the 12 strike, expiring next Friday. And I actually don't mind getting put those shares, but if I do get put those shares, then I'll have more shares and I'll have plenty of shares, and I'll have to find a new stopping point if the bad news continues to weigh on Sarepta. All right, so that was one of those trading lessons, right? That even when you have the best intentions to do risk management, the market sometimes will blow right through your risk management. And I suspect blowing to the new lows exacerbated the selling there. Okay, now we have IGV. I did mention this as a warning because it broke out to all-time highs and then fell back into the double top area. IGV is the iShares Expanded Tech Software Sector ETF. I was using it, am using it as a sentiment indicator for software stocks. So I was very relieved to see the 20-day moving average hold a support and IGV continue to rally off of that. So now I'm not in a rush to sort of trim holdings in my software stocks, and I'm going to keep holding them from here. All right, so that's good for the software stocks. Let's look at another industrial stock, 3M Company, ticker symbol MMM. This is a classic bearish engulfing top. You can see that it gapped up after earnings, and then sellers took over and took it down 3.7%. This is classic bearish engulfing. What is a bearish engulfing? Well, the stock opened higher than the previous day's high, and then it closed below the previous day's low. And you can quibble about whether it should be the closing or the intraday point. Regardless, this is a big red candle at the end of an uptrend. That's a classic end of a bearish engulfing top. I'm not interested in shorting it, but I just took because I was a big fan of buying Triple M back in its lows, and I hung in there for a long time and finally was rewarded. So I do check in on the stock every now and then to see if a new buying opportunity has arisen. And that is not the case. In fact, I wouldn't be buying it here because it looks like a top. But I want to keep an eye on this. Okay, Domo. I talked a lot about Domo. This is a data analytics platform. You can see here that this has been working out very well. I've accumulated shares when it pulled back here, and then when it pulled back, sorry, when it pulled back here, when it pulled back around to 12, I didn't wait for it to get all the way to the 50-day moving average. That was a good thing. I also bought more shares when it pulled back to the 20-day moving average. And then today on this big jump, I went ahead and then sold call options against my position. It looks like I went all the way out to August, so I'm actually in danger of getting these shares called away from me, which is not my intention. But I am trying to do a little bit more risk management with the market kind of wobbly here at all-time highs and market breadth not so as favorable as I would like. I am looking for opportunities to just do some more risk management without giving up positions, without directly selling positions. And Domo looked like a good one here because it looks like until I'm looking at today's close with a 13% gain, it looked like it was probably going to just chop around, making just very incremental gains. But anyway, I am not going to complain. I was just happy that the stock pulled back enough to give me some opportunities to buy after this nice post-earnings surge from May. So, we'll see what happens if I get called away. I will reevaluate a new entry point. Okay, Spotify is one I finally got into. As I mentioned earlier, I think in my blog, Spotify is ticker symbol SPOT, by the way, that I wanted to buy it and hold it the next time it tested 50-day moving average support. That time has already come. So I bought a few shares. I think I bought 10 shares. You can see that it's already precarious. It closed right at the 50-day moving average at $695.48. If I just pull back, this has been the most extremely impressive uptrend. So I'm not going to worry about I'm not going to worry about Spotify until or unless it actually breaks down below the 200-day moving average. And of course, you can see that, honestly, this stock is way overdue for a test of the 200-day moving average. It last got close in August of 2023. That's how strong this stock has been. And, just shame on me that I hadn't bought Spotify up until this point for a buy and hold. So we'll see if my purchase now calls the top. And I will end with ARK, which is ARK Innovation ETF. This is another one where I decided to do some risk management. I was very fortuitous in accumulating shares back in the tariff drama, trauma, and noise, back when we had the sell-off earlier this year. So now I have a very nice gain in ARK. And I'm sure those of you who have read my blog, which is drduru.com/122, or have watched these videos know that I get nervous when price action gets too far above the upper Bollinger Band. I took that opportunity to sell call options against my position. Unlike with Domo, I'm pretty sure those call options are going to expire worthless, but we'll see. But again, I only sell call options when I'm ready to give up the stock, if that's the case that happens. And I've had some nice gains here, so I'm not going to complain if I do, get that extra bonus by selling the call options. And one last one, which is IPO. I've written about ARK versus IPO, which is the Renaissance IPO ETF, and I said that basically IPO basically performs better than ARK as a speculation on innovation in downdrafts than in updrafts. And until the recent months, actually, it was outperforming ARK altogether. Now, IPO is greatly underperforming. You can see it's just been flat. This has been very disappointing. And I looked at the holdings for IPO, and they have been a little slow in getting some of these hot IPOs that Kathy Wood has definitely, and her team have definitely moved into their flagship ETFs. All right, so that is it. Please like and share this content so that the algorithm knows it's up. As always, subscribe to this channel if you want to get notified about this content. And if you have any comments or questions, just put them down below. All right, thanks for checking in, and I will see you the next time.